The first ominous signs of a looming recession came in the summer of 2006. In America, more and more property is flooding onto the housing market. Sellers outnumber buyers. Interest rates are rising, meaning that many homeowners can no longer afford their mortgage repayments. Bank loans are going unpaid, property prices plunge. For many people, the dream of becoming a homeowner is brutally crushed. January 2008. The European markets are still calm. Europe's stock exchanges are reaching record highs. Just 2 weeks later, the financial crisis hits Germany. The real estate financing bank Hypo Real Estate rocks the European markets when it announces heavy losses in its quarterly report. The company's share value plummets by 35%. Fears of recession cause panic in Europe's financial markets. On January 21, the stock exchanges suffer their biggest losses since September 11, 2001.
We're not dealing with an overvaluation of shares like we had in 2000. This has to do with structural problems in the finance industry. We'll have to wait and see how far stocks plummet and then work hard to get them back up.
The financial industry goes into meltdown. On March 16, the fifth largest American investment bank, Bear Stearns, collapses and undergoes an emergency merger with JP Morgan. The crippled U.S. mortgage banks Fannie Mae and Freddie Mac are nationalized. Competitor Merrill Lynch is only saved at the last minute when Bank of America acquires the troubled company and its investments. On September 14, 2008, the prestigious investment bank Lehman Brothers goes into administration. Now the floodgates are well and truly open. There's a serious and widespread loss of confidence. Former employees take their belongings home in cardboard boxes. Unemployed overnight. The world's largest central banks pump billions into the financial markets. They hope to achieve liquidity. October 6 is regarded as Black Monday for the markets. The Dow Jones loses a record 800 points in one day, its single biggest loss in history. For the first time in 4 years, the index slips below 10,000 points. Over the coming days, it slides even further to below 9,000 points. In Iceland, the financial crisis comes to a dramatic head. The Prime Minister warns of national bankruptcy, while at the same time issuing a guarantee to all savers. The state takes over the country's two largest banks, whose toxic debts are 9 times greater than Iceland's entire gross domestic product. Banks all over Europe are suffering badly. Governments across the world are intervening. They announce a number of bailout packages that offer the banks some protection. More and more financial institutions are taking up the offer of government protection. The financial crisis began in the troubled U.S. housing market and quickly spread to the rest of the world. Car manufacturers announce a drop in sales. This leads to a downturn in production and many workers being laid off. The entire automotive parts industry is affected. Nobody can escape the crisis. Manufacturers and engineering report sales cancellations both at home and abroad. All the signs point to a serious recession.